Hey everyone, crypto never stops evolving and neither do we. Here we uncover the latest projects, exchanges and breakthroughs shaping the blockchain space. From simple breakdowns to deeper insights, our goal is to make crypto easy to follow, exciting to explore and inspiring to be a part of. Every video brings something fresh, updates, ideas and opportunities that help you stay informed and confident in this fast-moving world. Let's dive in and explore the future of finance together.
The crypto market just went through one of its wildest weeks of 2025. Over $16 billion in liquidations, a $500 billion market cap wipeout, and yet Bitcoin is already bouncing back. So what really triggered this crash, and how are big players positioning for what's next? Let's break it down. Hey everyone, welcome back to Cryptologia, where we cover the latest market trends, on-chain data, and major stories shaping the crypto world. Disclaimer, this video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. Now, let's dive into the crypto market performance from October 17th to 24th, 2025. Last week, the market was hit hard by renewed US-China trade tensions and tariff threats. The total crypto market cap plunged by nearly $500 billion, bottoming around $3.6 trillion on October 18th, before rebounding to $3.8 trillion by the 23rd. Bitcoin fell as low as $103,700, then recovered toward $110,000, while Ethereum dipped under $3,700 and closed near $3,900. The Altcoin season index stayed low at 26 out of 100, with Bitcoin dominance rising to 58.8%. Meanwhile, stablecoin volumes hit a year-to-date high of $19.4 billion, signaling rising adoption for payments even in volatile conditions. And speaking of altcoins, one of them may be entering a brand new chapter that could completely redefine its image. So while Bitcoin and altcoins keep dominating the headlines, there's one move happening behind the scenes that could change the entire game for Dogecoin holders. And it's honestly one of the biggest steps Doge has taken toward real mainstream finance. This video is sponsored by House of Doge, the corporate arm of the Dogecoin Foundation, and CleanCore Solutions, the official Dogecoin treasury. Together, they're basically building the real financial backbone for Dogecoin's future. Here's the crazy part. House of Doge, now listed on NASDAQ under the ticker TBH, isn't just another meme-related project. It's literally the Dogecoin Foundation's corporate arm that's partnered with Robinhood and 21 Shares, with backing from names like Citadel and Pantera. We're talking about real institutions moving into Dogecoin's world. House of Doge is leading Doge into its payments era, and this is huge. They're working on yield-producing products, global payment integrations, and even a US Dogecoin ETF expected to launch soon. They're proving that Dogecoin isn't just a meme, it's becoming money with real-world utility. Now, on the other side, you've got CleanCore Solutions, listed on the NYSE as Dollar Zone. Think of it as the micro-strategy of Dogecoin, the official treasury that holds, manages, and grows Doge holdings at scale. They already manage hundreds of millions of Doge with transparent institutional custody through Bitstamp by Robinhood. So, when you put TBH and Zone together, you're looking at the engine behind Dogecoin's next chapter. House of Doge builds the partnerships, products, and tech, while CleanCore manages and grows the treasury behind it all. This combo could define Doge's move from meme to mainstream. If you want to dive deeper into how Dogecoin's evolving with these two powerhouses, check out the links in the description and pinned comment. You can visit houseofdoge.com and cleancoresol.com to learn more about TBH and Zone, the official Dogecoin treasury. It's honestly exciting to see Doge finally stepping into its global payments era, backed by real partnerships, regulation, and structure. Now let's jump back to the market talk, because what's happening next week might surprise everyone holding altcoins right now. Bitcoin spent the week bouncing in a tight but volatile range between $103,000 and $111,000, closing at $110,082 by October 23rd. marking its worst October since 2015, down roughly 5% for the month. But analysts say this drawdown wasn't driven by panic. It was part of a controlled deleveraging phase, where the market flushed out excessive leverage after the massive liquidation wave earlier in the week. Despite the correction, open interest climbed back to $26 billion, showing traders are still active and willing to take new positions. The futures basis, sitting between 6% and 7%, also reflects mild bullish momentum creeping back into the derivatives market. A key level to watch now is $116,000. A clean breakout above it could confirm renewed momentum and potentially open the door for a Q4 rally toward $135,000 or even $200,000 by year-end, levels some on-chain models still support. Meanwhile, Bitcoin's correlation with gold has surged to 0.9, one of the highest in recent years. This tight relationship underscores how investors are treating Bitcoin as digital gold, a hedge against macro uncertainty and geopolitical risk. Fundamentally, long-term holders remain steady, with supply and profits slightly decreasing but conviction staying strong. And as traditional markets continue to wobble, the spotlight on Bitcoin's role as a global, censorship-resistant store of value only grows brighter. While Bitcoin held the line, altcoins had a mixed performance. Ethereum traded between $3,700 and $3,900, briefly reclaiming $4,000 midweek before slipping back as CME futures volumes dropped nearly 18%. Despite that, on-chain activity remains robust, with staking deposits continuing to rise. Solana saw heavy volatility. Futures volume skyrocketed 57% to $13.5 billion, signaling strong institutional speculation. Yet SOL's price fell roughly 25%, closing around $184 as traders rotated funds back into Bitcoin. XRP dipped to $2.43 before recovering near $2.82, buoyed by a 7% rise in futures positions, while Doge, ADA, and Link recorded 20 to 40% drawdowns amid the broader risk-off sentiment. Interestingly, TRX stood out as one of the few gainers, up around 3%, continuing its pattern of resilience in bearish altcoin phases. On the regulatory front, payment innovation remained a key theme. Projects like Owlting introduced sub-cent stablecoin transaction frameworks, potentially paving the way for micropayments and DeFi adoption at scale. Institutionally, capital continues to flow into Bitcoin treasuries, with corporate holdings now estimated at over $800 billion this quarter, a strong signal that large players still view BTC as the safest asset in the digital ecosystem. So that wraps up your crypto market overview for October 17th to 24th, 2025, a week that tested traders' nerves, forced a major reset in leverage, and marked a significant leap forward for Dogecoin's mainstream expansion. The coming weeks will be crucial as markets digest this volatility in position for the final quarter of 2025. If you found this breakdown helpful, don't forget to like, subscribe, and drop your thoughts in the comments. Do you think Bitcoin can reclaim new highs before the year ends, or will altcoins finally steal the spotlight? Thanks for watching, stay sharp, and I'll see you in the next one.